Rates have to go up because they're out of equilibrium. Now, I'm John Fredericks, my good friend Mark Livingstone, who's going to be with us momentarily, and his team at Cornerstone First Financial. They're the mortgage professionals that I recommend. Now, you've heard Mark on my radio program for years, but let me tell you myself why you should call him today, because Mark and his team are mortgage experts. They're committed to providing personalized service with the best pricing and products. They don't screw around. If that's important to you, call them today, 202-625-1221, 202-625-1221. If stability, consistency, unmatched integrity are important to you, then take my advice and call my friend Mark Livingstone today. He'll be with us momentarily with Cornerstone First Financial, 202-625-1221, 202-625-1221. Or you want to do the browser thing, you can just go online, cornerstonefirst.com. That's cornerstonefirst.com. Dick's Sporting Goods announcing today, their CEO saying, we're getting out of the gun business. We're not selling guns to anybody under 21. Sorry, go somewhere else. And no more magazines over 10 rounds. Well, that's their decision. They're a private company, right? They can do whatever they want. They don't want to sell guns to people under 21 until the laws change. You want to buy a long gun, you can go to Moe's or somewhere else. Or, Bob's gun store, right? You can do whatever you want. This is a free country. So they have every right to do that, and you have every right not to shop there. This is what I love. Companies make decisions, and then people make decisions. I'm for that, right? It's like these athletes that want to pop off and say this and say that. Michael Jordan said it best. You know why he's never been involved in any of this stuff? You know what he said? Republicans buy sneakers too. Best line ever. Joining us now, Mark Livingstone. He's the head honcho at Cornerstone First Financial. Hey, Mark, good to have you, man.
Hey, John, good morning to you, sir. Coming at you live from the nation's capital, buddy. How you doing?
We're fired up today. Give us an update. What are you seeing in the industry market? What's the future look like economically here?
Well, John, what's going on is, as I say every time I'm on with you, it's housing and jobs. Housing and jobs are what drives the economy. And as your listeners well know, the unemployment rate is at record lows right now, 4.1%. So there's the jobs and the housing. We are seeing double-digit appreciation in all sorts of areas of your listeners. Yesterday, it came out from the National Association of Realtors, John, that year-over-year increases are 6.3 nationally speaking, appreciation levels of homes. But I looked up some pockets of your listening area. So, for example, double digits, like Richmond, 13.1, Fairfax County, 12.2. These are levels of appreciation that we're seeing. Single digits, some areas which also are great, Roanoke, 0.4. We're seeing Hampton Roads up 4%, and that's year over year. The most recent statistics come in from December. So December of 2016 to December of 2017, you see home values heating up and appreciating. Why is this? It's because there are just minimal units that are for sale right now. And what that's doing is that it's pushing values higher because there's more contracts being written on the minimum homes that are out there on the market right now. So it's just incredible. Yesterday, I wrote a loan for a home where they put a contract on the house and there were 15 other offers. And what that does is increases the value. So housing and jobs are what's really driving the economy. The economy, unless you listen to fake news or live under a rock, you have to know that it's heating up. Just yesterday, the consumer confidence came out, and it's the highest since November of 2000.
We're rocking.
So, isn't that amazing?
Yep.
So Jerome Powell, the Fed chairman, yesterday took a hawkish stance on what's happening within the Feds. They want to keep inflation right at the 2% level, and he said that interest rate increases are imminent. Goldman Sachs has said that their probability of an interest rate increase in March is 89.9%. That's pretty high, I'd say, right?
Yes.
So we know that interest rates are going to go up. We've already seen them go up since the last time that I was on your show, January 4th. And so what that means to your listeners is that we know interest rates are going to increase this year. So right now is the time to refinance or buy your house. We're seeing at Cornerstone a flight to arms, the adjustable rate mortgages. because interest rates are breaking the 4.5% and likely will break the 5% ceiling, which we haven't seen in years. So we're seeing more and more people apply for these ARMs. We've got some very aggressive interest rates when it comes to ARMs. But more importantly, we're just seeing all these contracts. So, John, I wanted to let your listeners know that we have partnered with a real estate company, and we have a new program called Hometown Heroes. And what the Hometown Heroes does is that we are offering these Hometown Heroes, which are police officers, firefighters, veterans, teachers, those 4 categories, we will give 20% of the real estate commission back to those that list their house or buy a house, and then $750 back from us, Cornerstone. So 20% back from the real estate company, $750 back to these heroes. It's
that's a great
an incredible opportunity for Cornerstone to give back to those that give back to their community.
So is it a particular real estate firm you have to deal with, or
yes,
how does
it's a
that
real
work?
estate firm that Cornerstone is aligned with, but they have agents all over in Tidewater, Norfolk, Virginia Beach, Richmond, up here in Maryland, D.C. So if you are a firefighter, police officer, teacher, or veteran, military veteran, and you list your house or you're buying a house, call Cornerstone First Financial today, and we're going to put you with one of these agents that are licensed in your area, and 20% of their commission. So Cornerstone, as I say on my commercials, we already guarantee we'll meet or beat any competitor out there interest rate-wise. Now what I've done, John, is aligned ourselves with this real estate company, so 20% of the real estate agent's commission is going towards your closing costs, and Cornerstone will give $750 back towards the closing costs as well. It's a win-win situation for your listeners and for those looking to buy or sell their house. I'm always trying to keep my finger on the pulse of what's happening in the industry and what I can do to best position Cornerstone to help your listeners get the best deal, the lowest rates, to move efficiently through the loan process and get the programs that are best suited to your listeners.
So here's what you do. Give them a call today, 202-625-1221, wherever you are, 202-625-1221, and they'll work all this out for you, 202-625-1221. Information is power, $750 in your pocket, 20% off your commission in your pocket. Let's talk about VA and FHA 30-year loans right now, 3.99% on a 15, 4.25 on VA. How's this all work?
Well, what that means is, so those are called government loans, FHA and VA, or we call them in the shop, layman's terms, are govies. We call them govies. And these govie rates are a little bit lower than the Fannie Mae conforming rates. And so what that means is that you can still get these unbelievably low rates prior to the Fed raising rates at the March meeting coming up just in a few weeks. And so I also wanted to talk briefly about the tax reform and what that means to your listeners as well, John. As we know, the mortgage cap used to be at $1 million. If you had a mortgage, $1 million or less, you could deduct the interest. Well, with the new tax reform, they lowered that to $750,000. So going forward, you can only cap or write your interest off on your mortgage, $750 and less. But you know what, John? Above $750 is only 1% of the homes in the United States. So it's really not that detrimental. Mm-hmm. But the big thing I want the listeners to understand is that now, going forward, the interest on home equity lines of credit is no longer tax deductible unless that home equity line of credit was used to purchase a home or do major upgrades. And most home equity lines of credit were used to pay off debt. Mm-hmm. So therefore, that interest is no longer going to be tax deductible. So now we're seeing a lot of people that because homes are appreciating, they want to consolidate their first and second mortgages, that home equity line of credit, into a new first mortgage to make it fully tax deductible. And I say do that now because my prediction is that interest rates will be above 5% probably by the end of the summer. So take advantage of the low rates now, consolidate your first mortgage and your home equity line of credit now while interest rates are still low. That
is the best deal. Look, they're going up, right? Take advantage
100%.
of it now. And that's why I asked Mark today to come on our show, because they are going up. I mean, there is no doubt this has nothing to do with economic policy or some. Interest rates have been artificially kept low by Janet Yellen's Fed, appropriately so when the economy is growing at 1%. Take politics out of it. Who was president it didn't matter. Janet Yellen did the right thing. There was quantitative easing. Interest rates had to stay down. That also drove money into the stock market and things like that. That's all changing now as the economy grows 4%, 4.5%, 5% GDP growth. Interest rates have to go up. So you got to take advantage of this right now. Now, get the information that you need to make this work by calling Mark Livingstone today at 202-625-1221. 202-625-1221. Both Mark and his team standing by the great peeps. 202-625-1221, because housing appreciation, homes, as you said earlier, at an 11-year high. How can you get out of PMI with that?
Well, John, what we can do is as long as you have 20% or more equity in your home, there's no need for PMI. And as most people know, PMI does not benefit the homeowner whatsoever. PMI benefits the lender, so that if, God forbid, they have to go into foreclosure, then the PMI company will pay the lender the difference between what the house sells for and what is owed. So the PMI is not there to benefit the homeowner. And so if you have enough equity, or shall I say, if you're buying a house and putting down less than 20%, you're going to have PMI. But as homes appreciate, which we already talked about, and we're seeing double digits in a lot of your listening areas, then as homes appreciate and your balance goes down, most people don't realize that they have the 20% delta that they need in order to eliminate the PMI. So do yourself a favor. You can go online and do cornerstonefirst.com and apply, and I'll have a loan officer give you a call. And we will check your house value for free. We'll talk to you, see what improvements you've made, what our house is doing in the area, and we'll give you your home value. And then you can make the educated decision as to whether it makes sense to refinance and eliminate that PMI. John, last time I was on your show was January 4th, and we had such a huge response from an offer that I made that day that I'm going to make that offer today and today only.
Wow.
That if you call in and you say, hey, you heard me on the radio, I'll pay for your appraisal up to $450, and we'll reimburse you for that appraisal just today. And we saw such a huge response when you and I were together down at Corey Lewandowski's house in January and at his headquarters, that we closed so many loans because so many of your listeners took advantage of that offer. So today only, I'll pay your appraisal up to $450. And I want the listeners to remember the Hometown Heroes program that Cornerstone is now affiliated with, where we'll give 20% of a real estate commission back. Call for more information or go online and apply at cornerstonefirst.com.
Cornerstonefirst.com, or give them a call today, 202-625-1221, 202-625-1221. Think about this. Get your home appraised. Get it for free. They'll reimburse it up to $450. That's a big chunk of cash right there. Once you get your home appraised, then you're good to go. You can get out of PMI. There's a lot that you're going to be able to do. You can also get veterans loans, and the IRRLS, the EARLs as we call them, cash out to 100%. How's that work?
Well, the VA allows up to 100% of the appraised value, and that's the VA EARL, the interest rate reduction refinance loan. And what that means is that the veterans can go up to 100%. So if the house appraised at $280,000, guess what? You can get a loan for $280,000, and that interest is tax deductible. So if there's a veteran with a home equity line of credit, you should refinance and combine the two so that all the interest is tax deductible, because it's no longer tax deductible on those HELOCs unless it was used to purchase the home. So we'll go up to 100%, 100% purchase too. So if you're buying a house and you're a veteran, and it's sad to me because a lot of veterans call me, John, and aren't even aware of this program. And I'm like, where's the misinformation? Why are they not being told this when they get out of the armed forces or they're still in? But for zero money down, a veteran can get into a house. As long as they have their certificate of eligibility, they can have been in the reserves. It can be a spouse that's in the military. 100% purchase, no money down. And if there's 10% or more disability to that veteran, there's no funding fee. There's a small funding fee that's wrapped into the loan, and there's no mortgage insurance. It's just an awesome, awesome product for those veterans that have just so honorably served our country. And my grief is over those that don't even know about it and get these conforming or FHA loans by these mortgage companies that don't know enough about VA loans, or just for whatever reason don't tell them about it.
Well, because they don't have the information and they can't do it. That's why you got to call Mark Livingstone and his team today. I wouldn't go anywhere else. They're the people. 202-625-1221. 202-625-1221. I got about 4 minutes, Mark. I really want to talk about the fact that you do loans at Cornerstone First Financial that you simply can't get at your local bank, right? You go there, you go through all the stuff, you don't get the loan. A good portion of your business are loans that come from retail banks that can't figure it out. SunTrust, PNC, Capital One, etc. Because you'll do loans with a credit score of 580 to 640, which a traditional bank is not going to do, because you understand people have some issues. They got a ding and a dang, and you figure out. How does that work?
Well, so, John, we are what's called a correspondent lender, which means we are a bank with our own money, and then we're also a mortgage broker. So what I do is I scour the streets looking for lenders that approve loans that maybe people have challenged credit. So it's like a dating service. You know, you go to a dating service and you want somebody who's like this or like that because everybody's different. Well, everyone's financial situation is different as well. So if somebody has challenged credit, or someone's a veteran, or somebody only has 3% to put down on a new home, or whatever it is, my job as the owner of Cornerstone is to find a program that best suits their needs. And so a lot of banks do call us. I'd say a quarter of our business comes from bank fallout, is what we call it. Those that went to these traditional banks on Main Street and couldn't get approved, and maybe some of those tellers have heard me on the radio or I've been in there giving out my pamphlets, and they call and go, hey, listen, I couldn't get a loan at this bank. Mark, can you help me? And out of all those people that call, I'd say about 75% of them, we can get them in the loan program that best suits their needs. We just closed a gentleman from your show, John, who's a retired Fairfax County firefighter, and unfortunately, due to some circumstances, he had to file bankruptcy just over a year ago. Well, most banks will not touch that unless you've been out of bankruptcy 3 years. We were able to secure him a loan, and he was still in bankruptcy. And so we put him on a payment plan, got him a loan. He had a 580 credit score. It was his primary residence. And bam, we'll come back and give him an FHA loan when the bankruptcy is discharged in just over a year. So it's just a win-win for your listeners that we can help people that otherwise don't have a solution.
All right, look.
Benefits, savings, and solutions.
I love that. Benefits, savings, and solutions. That's the Cornerstone way. But here's the deal. Right now, you call today. They got this great deal going on. Get your house appraised, $450. It's up to $450 value. They'll reimburse you $450. Get your home appraised. See what it's worth. Once you do that, you'll know what your options are. There's a lot of options. You know, refi, combining your line of credit like Mark talked about, the different things that can save you money with the new tax code, the new tax structure, all kinds of opportunities out there. Reverse mortgages, if you happen to be in that situation. You've got the IRRRLs you talked about. It all stems, though, getting your home appraised, knowing what you're dealing with. That's the first step. And right now, if you call today, that's going to get reimbursed up to $450. 202-625-1221. Look, I've been dealing with Mark Livingstone for 7 years. He's a founding sponsor of my show. I've referred hundreds of people to him, all great feedback. I wouldn't recommend anyone else. He's been coming on my show for 7 years. 202-625-1221. 202-625-1221, or go to cornerstonefirst.com. Cornerstone First. I tell you what, I'm out of time, Mark, but I appreciate all you guys have done. And you just got to pick up the phone, man. 202-625-1221. Mark Livingstone. Got to go.